management for the day, Mr. Vivek Kumar Devangan, who is the chairman and managing director at REC Limited. The stock has been one of the largest multi-baggers over the last 2 to 3 years at least, and it's a pleasure having you here, sir. First off, I want to try and understand growth because a larger part of the re-rating from an investor perspective seems to have happened. The investor will likely now shift focus towards growth. Talk to us about the Q1 growth numbers and how you're expecting FY25 and 26 to shape up, where AUM growth is concerned. How are approvals also coming through? What's the pipeline like?
Yeah, Q1 results have been fabulous for REC. Our sanctions have increased by 24%. Last Q1, our sanctions were to the tune of about 90,797 crore. This quarter, our sanctions have gone up to 1,12,791 crore. Disbursement has seen a growth of 28% from 34,133 crore to about 43,652 crore. Our asset under management has increased by 17%. Let me remind you that in FY23, our asset under management had grown by 13% from 3,85,000 crore to 4,35,000 crore. In the last financial year 24, our asset under management had grown by 17% from 4,35,000 crore to 5,09,000 crore. And I'm happy to share with you that we are able to sustain this growth momentum at the rate of 17%. Now our asset under management has grown to about 5,30,000 crore. As far as FY25 and FY26 is concerned, we would like to maintain this growth trajectory of 17%. Our total income has grown by 19%. Our profit before tax has also increased by 17%, and profit after tax has increased by 16%. We hope to maintain this growth trajectory, and we hope to attain asset under management to the tune of about 10 lakh crore by the end of 2030.
Well, very strong guidance continues. So where are you seeing growth? On the thermal side, on the renewable side? How much of the incremental lending that you are doing is to private sector versus PSUs, if you can give us that?
Yeah, our major focus has been lending to renewable energy sector. We have covered the entire gamut of green projects from solar, wind, hybrid solar, wind, storage solution, be it battery energy storage or pump storage hydro projects. We also sanctioned large hydro projects, solar module manufacturing, wind turbine manufacturing. We also sanctioned green hydrogen, green ammonia projects, electric buses with associated charging infrastructure. So our share of renewable energy portfolio earlier was about 7%. Now it has increased to 9%. And over the next 5 years, we intend to increase our renewable energy portfolio to 30% of our asset under management to the tune of about 3 lakh crore by the end of 2030.
And so,
with regard to
private
sector, asked about this private sector also.
Yes, sir.
Our exposure to the state sector was about 90%, and to private sector was 10%. Since most of the renewable energy projects are coming in the private sector, our exposure to private sector is likely to increase from present about 10%. It will increase to about 30% by the year 2030. And with regard to coal-based generation, the outlook is quite positive actually. The Government of India, Ministry of Power has laid the roadmap that country will still require additional capacity of 94 gigawatt capacity. And for that, lending requirement would be to the tune of 6,67,000 crore, and we are targeting a market share of about 20% from this additional coal-based capacity which will come in the country.
Understood. Sir, provisioning has seen a bit of an uptick this quarter. Is that because of recoveries being slightly slower this quarter? What is the recovery number this quarter, and what's the FY25 full year guidance?
Yeah, in fact, we had total 16 stage assets at the start of this financial year. 7 assets are heading towards liquidation, and we are quite confident this liquidation process will be completed in this current financial year. Remaining are operating assets, and they are also in advanced stage of resolution. Some of them are getting resolved through NCLT mechanism, and some are getting resolved outside NCLT mechanism. And we hope that we'll be able to resolve all these stage assets in this FY25, and we are targeting to become zero net NPA company by the end of 2030. This will amount to a write back about 2,000 crore in this current financial year.
Understood. And And FY26 onwards, sir, the recovery will largely be zero?
Some of this liquidation assets, uh, they are because we have made 100% provisioning. Once these assets are sold out, some land is there, some machineries are there. Some of the recoveries will come because we already made 100% provisioning. But whatever proceeds we get from the sale of this liquidated asset, that will get some recovery will come next financial year also.
Understood. So recovery pipeline also looking decently strong. Understood. And sir, any specific reason why this quarter we saw a bit of an uptick on the provisioning side, unless I missed that from you?
Some of the state sector projects in Andhra Pradesh actually, they had got changed from special mention account 1 to a special mention account 2. So as per our ECL policy, we have made slightly higher provisioning. That was the reason.
Understood. So I'll come to your margin number. Do you expect 3.6% margins through this cycle? Do you expect it to come off a little bit given the kind of pressure there is with regard to cost of funds in the market and given the liquidity squeeze?
In fact, we have been able to bring down our cost of fund to about 7.05% in the at the end of last financial year. By the end of 31st March 2024, our cost of fund was about 7.13%. We have been able to bring down the cost of fund by 8 basis point. We hope to maintain the spread of about 2.8 to 3%, and our net interest margin we are targeting it will be ranging from 3.5 to 3.7%.
Got it. So you've traditionally, when I'm looking at your numbers, whenever you've done mid-teens kind of growth, you've done 20% plus on profit after tax in terms of compounding. And that's been the kind of story that we've seen over the last 5 years or so. Do you expect that also to happen, maybe a 23, 24% profit compounding to happen over the next 4 years or 5 years, at least till 2030?
Yes, we do hope that our profit margins will be more than 20% in the next 4 to 5 years.
Okay. And sir, with regard to net NPAs and your NPA ratios, you're guiding for a zero net NPA ratio by the end of FY25. How far along on the journey are we, and are you still comfortable with that guidance? I know you still mentioned it, but I just want to understand levers for ensuring that that guidance is met.
Yes, we are quite confident that we'll become zero net NPA company by the end of this financial year, because some of the operating assets like KSK Mahanadi, Sinnar, Nasik plant and Hiranmai, the process under NCLT is in advanced stage. We are in the process of getting financial bit, and we hope to resolve these assets within the next 3 to 4 months.
Okay. So sir, strong growth visibility. Your book is going to shift to around 30% private. Any concern with regard to asset quality from a medium to long-term perspective? Of course, next 2 years you have good recoveries which will likely offset absolutely any slippages which may happen. But from a medium to long-term perspective, what is REC doing differently in this cycle?
In fact, our risk management division we have strengthened our risk management division, and we have very strong our project appraisal team and entity appraisal team, and we have been focusing on good asset quality and good entity actually. So we are willing to take some hit on the margin, but we are not willing to compromise on the asset quality.
All right. Thank you so much, sir. It's been a pleasure interacting with you, Mr. Devangan. With that, we're out of time on this edition of the Small and Mid Cap Show. Thanks so much for tuning in. Indiabulls Housing Finance is now Samman Capital. Jio Samman se, and keep watching NDTV Profit.